Welcome back, folks. I am John Najarian, and this is 3 at 3. Every business day, you know the drill. We bring you unusual option activity. And that's the kind of activity generated on the trading floor you see behind me. Big buys of calls or puts. That's what we're looking for. If somebody sells an option, of course, they can only make what they took in as premium on that trade. But on the other hand, if they buy an option, they can get a leveraged return on that. By that, I mean you could invest $1 to make 3 or more. On the other hand, if you take in $1 from selling an option, you might win a fair amount of the time, but that's all you can make is that $1. And when it blows up and goes the other way against you, either because you're short a call that the stock runs up or you're short a put and the stock runs down, those can be life-changing events. So I'd rather have the sort of positive life-changing events that you get from following smart money and getting that leveraged return that I've spoken of. So with that said, let's start today's 3 at 3 for the 17th of May, 2022. Apple, one we talked about yesterday, already working, nearly a $4 move out of the stock. So if you invested $140,000 to buy 1,000 shares of Apple, congratulations, you're up $4,000. On the other hand, if you bought 10 of the 145 calls and sold today 10 of the 50s, you might be in this thing for nothing. You might be banking money already more than the 4,000 and certainly a better return on capital than the 140,000 you would have had to put up, or call it $70,000 and bought the rest on margin. So that's the way this one's playing. Bang, a nice trade in just less than 24 hours. Crypto Convo. I had a great conversation with Randall Crowder. I salute you, Randall. Randall is a former Army officer, then became venture capitalist, and now he's with a company called Funware, P-H-U-N. It is both publicly traded on the NASDAQ, and it is a coin as well. And they do fabulous stuff for basically getting people paid for all of the data that the big companies would just otherwise take from you. With Funware, you can actually get paid for your data. Very interesting conversation, smart guy, longtime friend. Go check it out at cryptoconvo.com. That's cryptoconvo.com. All right, how about this one? Just from Friday, I guess. K-Web working again. When we got into it, the stock was 24 and change. They were buying the June 26 calls. Now it's 27 and change. And if you look at the bottom of the screen there, 28.43 was the high of the day so far today for the Chinese interwebs. So that means that the stock is likewise up almost, $4 since when we spoke of it. In this case, you could have turned $24,000 into $28,000, which is a nice trade. Or you could be in the calls and have a lot less downside risk and get that leveraged return that we're talking about. Even a $24,000 investment's a lot of money. Buying the calls for $1.72, and I didn't buy those 26 calls. I bought the 24.50 calls, I think, either that or 24 calls, and sold upside calls now against it. Bang, that's the way I trade them. Let's talk about this, Pico. So this is, getting ahead of myself. Pico is a company that is trading for $34.13, as you see. They bought 4,500 June 35s. So I will buy and have bought these June 35 calls. My intention is that I will sell higher strikes against it 1-to-1. And again, as long as I do that and maintain that 1-to-1. I do not have upside risk. I'm not naked short. I can always exercise my lower strike if I get assigned on an upper strike call. I'm never at risk of a takeover. Instead, I can just take down my capital commitment to the markets and cut into the time decay that is very evident in options that have less than 6 weeks to live. And this one clearly fits into that category. It's got about 4.5 weeks to live. Bang, that's first of today's 3 at 3. Second, FXI. We also had ASHR. Both of these are big Chinese stock market bets, and both of them were about 35,000 contracts. So somebody steps in, buys 35,000 of the just out of the money June 31 calls with the FXI trading not too far off the lows of the year at $30.31. So somebody's putting 93 cents on the line instead of $30 on the line. So it's 1/30th the amount of money required for this particular trade versus the stock trade. And again, if it works and the stock goes up, in this case, it's an ETF, the ETF goes up $4, yeah, you could make $4 on a $30,000 investment, or you could make $4 on a 93-cent investment. Again, I like doing this because I'm defining my risk when I enter, and I have that leverage bet to the upside. But there will be those of you, and I can't fault you, who will decide I'm going to sell a put or I'm going to sell a put spread. Go for it. Doesn't mean you're wrong at all. I know a lot of successful put sellers that make a lot of money. I manage money through one of our advisory roles. I don't actually manage it, of course, but my team does. And we routinely look for big fat puts to sell. Why? Because it's a buy right. If you own the stock and you sell a call, it's the same as a naked put. So just keep that in mind. Third of today's 3 at 3 is Pinterest. Love going to the Pinterest site. This one, bullish call buying. When the stock was 22.30, they bought 14,000, which is 1.4 million share equivalent of the June 27.50 calls. So those are calls clearly that are $5 out of the money. I don't like buying $5 out of the money calls. I like buying at the money calls, which I've done here. And my intention is, again, since this is June, it's pretty rapid time decay. I will start selling upside calls against it as the trade works. And if the trade doesn't work, because some of you are saying, oh, great, John, if the trade works, that's what you're going to do. What about if it doesn't work? If it doesn't work, I will cut my losses at somewhere between 25 and 30%. In other words, if I pay, for instance, let's say I leg into a spread here and I pay 80 cents for a spread. If that falls to, call it 50 cents, I'll be out. I will be out. I won't wait for it to draw down to 50%, which would be 40 cents if I paid 80. At 50 cents, I'll be out if it trades down there. On the other hand, if it moves in my direction and I'm able to sell those upside calls against it, I will take half off at a move of somewhere around 50% in the option side of the trade, because that's how I roll. Bang. If you'd like to learn more about how we roll and how you can roll, go to marketrebellion.com/get started. That's marketrebellion.com/get started. You can learn all about what we do, how we do it. You can start doing it yourself. You'll be a better trader. You'll be able to trade with leverage, define your risk on entry, all the fun stuff that Pete and I do every day. Hey, folks, thank you for joining me. I hope you have a great day wherever you are, and I look forward to being back here with you tomorrow. Thank you.